In just a few short days, the NASDAQ is going to be rebalanced, meaning the biggest tech stocks such as Apple, Amazon, Nvidia, Microsoft could all fall in price while other stocks rise in price. I'm going to explain what's happening, when this is happening, and most importantly, how you can profit from it. First, let's start with what's happening. NASDAQ is making a big change to its most popular index, the NASDAQ 100. So let's talk about what this special rebalancing is and its impact on the stock market. A special rebalance of the NASDAQ 100 index will take place later this month as the exchange operator NASDAQ looks to reduce the concentration of heavyweight companies that account for nearly half of the index weight. Microsoft, ticker MSFT, Apple, ticker AAPL, Nvidia, ticker NVDA, Amazon, ticker AMZN, and Tesla, ticker TSLA, combined account for 43.8% of the weight of the index. As part of the rebalance, that will come down to 38.5%. Now, interestingly, this leaves out Alphabet, which actually the top 5 include Alphabet, not Tesla, but still Tesla is going to come down as well. So let me explain why. A special rebalancing, which is part of NASDAQ 100's methodology to maintain compliance with the U.S. Securities and Exchange Commission rule on fund diversification, has only taken place twice before. Once in 2011 and prior to that in 1998. Microsoft has the largest weight at 12.91%, followed by Apple at 12.47%, Nvidia at 7.04%, Amazon at 6.89%, and Tesla at 4.5%. A recent rally in Tesla shares pushed the aggregate weight above 48%, triggering the rebalance. Now, Alphabet is also included in there. Alphabet's Google, but Alphabet's in kind of a weird situation because Alphabet is included twice. Once with their preferred shares and once with their common shares. Combined, Alphabet's over 8%. But because it's separated, those two stocks, GOOG and GOOGL, are each about 4%. So it's still unclear if NASDAQ is going to combine those two together when considering their rebalance, or if they're going to leave those two separated when considering the rebalance. We're going to get details on Friday as far as what this rebalance is actually going to entail. Now, to be clear, the rebalancing will not include any additions or removals from the index. It's just going to adjust the overall weighting of some of the components, meaning some stocks will go up, some stocks will go down, but no stocks will be added or removed. So what changes are going to be made to the weighting? Well, you have to understand there's a couple of rules that the NASDAQ has to follow. The first rule is that the top 5 stocks in the index must not exceed 38.5% of the total weighting. The second rule is that no component outside of the top 5 can exceed 4.4% weighting in the index. Currently, the top 5 holdings, which are Microsoft, Apple, the 2 alphabets combined, Nvidia, and Amazon, account for 46.6% of the NASDAQ weighting. That means those stocks will have to be rebalanced to fit within the 38.5% max. Currently, the rebalancing numbers are unknown, but it is likely includes a reduction in all of those stocks. Now, outside of the top 5 stocks, Tesla currently holds a larger weighting above the max threshold of 4.4%, and that is likely to see a small adjustment to rebalance it below that threshold. But notice in this article, it includes the 2 alphabets combined, and it includes Tesla as the 6th largest holding, while another way to look at it would be Tesla's the 5th largest holding, and the 2 alphabets are the 6th and 7th largest holdings. So it's still unclear how the NASDAQ is going to calculate Alphabet, as being that it's two different stocks that make up a singular company. We're going to find out on Friday, though, exactly what the NASDAQ is going to do. But just know that Alphabet is the big unknown here. But what is known for sure, absolutely for sure, is that Apple, Microsoft, and NVIDIA are all going to be affected to the downside. So what does this mean for the stocks in the index? Well, rebalancing the index would suggest selling overweighted stocks and potentially buying lower weighted stocks. Now, can that contribute to downside moves in the top stocks? Potentially, yes. The reason that we say potentially it could contribute to downside moves is because even though these stocks are going to be weighted lower by as much as 5%, the problem here is that, yes, that 5% drop is going to cause a drop in these stocks. But the question is how much? And one thing is for sure is that when you compare how much these stocks have run up over the past year or even the past 6 months, even a 10% drop in one of the stocks is going to be negligible compared to how much it's run up over the past 6 months. So when we're looking at this from a long-term perspective, any drop in these stocks is negligible. And that's why most likely any drop in the stocks is going to result in a buying of the dip by retail investors. Now, that said, here's where it gets a little bit interesting, is that however much these stocks drop by, it could actually be exponentially higher than it otherwise would be. If investors collectively start to sell these stocks in anticipation of them dropping, we could see an outsized move to the downside, followed by a rapid recovery after the rebalancing actually occurs. And the rebalancing is set to officially start on July 24th, which is a little over a week from today. So one potential outcome of all of this is that the top stocks could actually fall next week in anticipation of them falling due to the rebalancing. And then they could rally the week after in a classic sell the hype, buy the news type of event. So that's one possibility that could cause a pretty significant move to the downside. Another possibility, though, is that larger institutions start to sell these stocks and then retail just comes and buys them up and we don't see that big of a drop at all. And then the other thing we have to understand is we're right in the middle of earnings season. So the problem is whatever move these stocks make is very likely to get wiped out by however earnings come in. So it's really kind of a weird time. If we weren't in the middle of earnings season, I think it would be a lot clearer that these stocks would drop. But because we're in the middle of earnings season, it's very hard to say what exactly is going to happen with these particular stocks. Still, there is a way to play this and make money, and I'm going to share that with you in just 1 second. Now, one thing we've seen already is that when this NASDAQ rebalancing was announced, the market heavyweights, those top 5 or 7 stocks, actually dipped ahead of the NASDAQ rebalance. Of course, they've recovered those losses already, especially after today's move up, but it's important to understand they did dip when this was initially announced, meaning there's a pretty good chance we could see a dip on these stocks next week as well. So why are these stocks going to go down? Well, changes to the index are going to force investment funds that track the index to adjust their positions and sell shares of companies that have their weight in the index reduced. That means Microsoft, Alphabet, Amazon, Apple, and others could fall as their overall weightings are reduced, as funds that track the NASDAQ 100 are forced to sell those stocks. A host of funds that track the NASDAQ 100, including the popular exchange-traded fund, or ETF, the QQQ, are expected to be impacted by the rebalancing. Now, I want to be clear that while shorting stocks like Apple and Microsoft, Alphabet, Nvidia, Tesla makes sense, it actually does not make sense to short something like QQQ or NQ futures, anything that deals with the NASDAQ 100. And the reason that doesn't actually make sense is because however much the large mega cap stocks get sold by, other stocks are going to increase in weight, and those stocks are going to get bought up. So all that's going to happen here during the special rebalancing is that money is going to move out of the mega cap stocks and it's going to move into some of the smaller weightings in the NASDAQ, meaning the total amount of money in the NASDAQ 100 or the total amount of money in the QQQ or NQ futures is not going to change. That is going to remain 100% flat the same. That's the very important thing to understand. There's no change there. So trying to short QQQ is not going to work because it's not going to be affected total money-wise. You have to play individual stocks if you want to make money on this rebalancing. Now, obviously, we can short the mega caps, but the question is, what's going to go up? Well, let's talk about which stocks could see a bump in weight and therefore an increase in price. Wells Fargo Index strategists estimate that Starbucks, ticker SBUX, Mondelez, ticker MDLZ, Booking Holdings, ticker BKNG, Gilead Sciences, ticker GILD, Intuitive Surgical, ticker ISRG, Analog Devices, ticker ADI, and Automatic Data Processing, ticker ADP, will all see their weight increase in the NASDAQ 100 index. The smaller companies will end up representing a greater percentage of the entire index, and that will require portfolio managers to add to their positions in these companies, which in turn will boost their share prices. So one way you can play this and make money on the rebalance is by buying one of these stocks. So when will we know exactly when all these changes will take place and how much the rebalancings are actually going to be? Changes are set to be announced on July 14th. That's this coming Friday. And they will take effect before the market opens on July 24th. That's Monday. So next week is going to be the 1 week to trade these. Now, obviously, there's a couple of different ways we can play this. We can either buy the stocks that are expected to go up. We can short the stocks that are expected to go down. We could buy call options on the stocks that are expected to go up or put options on the stocks that are expected to go down. There might be some safer ways of playing this, such as doing some put credit spreads on the stocks that are going to go up. That way, it doesn't really matter how much they go up, just so long as they go up, you make money. You might also consider some call credit spreads on the stocks that are expected to go down. That way, it doesn't really matter how much they go down, just so long as they go down by any amount, you'll make money. By the way, if you're not sure what call credit spreads are and put credit spreads and all these multi-leg options, I teach you how to trade all these in my coaching program. By the way, in that coaching program, I also talk about single stock ETFs. What is a single stock ETF? Well, a single stock ETF is an ETF that provides leverage on a single stock. Now, these can be used in lieu of options to take out long or short positions that are leveraged compared to just buying the stock. So, for example, we expect Apple, Amazon, Google, Microsoft, and Tesla all to drop in price next week with this NASDAQ rebalancing. Rather than shorting the stock or buying put options, you can buy ETFs that short those individual stocks. So, for example, you can buy AAPD, which will go up as Apple goes down. You could buy AMZD, which goes up as Amazon goes down. You can buy GGLS, which goes up as Google goes down. You can buy MSFD, which goes up as Microsoft goes down. And you can buy TSLS, which goes up as Tesla goes down. And of course, if you don't know how to trade multi-leg options, which are probably the safest way to play this rebalancing, and you want to learn how to trade multi-leg options so that you can make money no matter which way stocks go, and you can have a much better chance of making money with options than you ever will just by buying single leg calls and puts, I encourage you to come join my coaching program where I will teach you how to trade these multi-leg options. If you want to get more information on the coaching program and want to learn more about what's involved with learning how to trade multi-leg options, I encourage you to set up a call with my onboarding specialist who can answer all of your questions and give you more information about the program. To schedule a call with the onboarding specialist, just go to weprofitdayandnight.com. That's weprofitdayandnight.com and click the Start Learning button to schedule a call with the onboarding specialist to get all of your questions about the program answered. If this video helped you to understand the NASDAQ rebalancing and how to make money from it, then please be a good friend and share this video on your social media pages so that others will know what's going on with this NASDAQ rebalancing as well. And if you got a lot out of the video, also please make sure to hit the like button and subscribe. And finally, if you missed yesterday's video where I talked about some of the market news that's causing this market rally, but also some of the things you have to watch out for in the economy, make sure you watch the last video that I uploaded here.